Hi folks, this is Sean Hyman, and I wanted to come to you today and talk to you about using daily doji candles as a heads up for a breakout. Now, first let's look at what is a doji. So let me just take a look here, and I'll show you what a doji is. You can blow this up where you can see it really easy. A doji is simply a candle that a doji means indecision. And what it is the market trades up a lot, trades down a lot, but then it closes pretty much roughly where it began. Here's the doji candle. Here's a doji candle. It's basically a plus sign is what you're looking for. That's the easiest way to describe it, is a plus sign. It's a sign of indecision. And what you'll see is after these periods of indecision, some pretty good sizable breakouts happen after that. So the candle in itself doesn't mean a whole lot, except for when you use it as a catalyst for a pending breakout. So we're on the dollar CAD daily chart is the chart we happen to be on. And again, I'm just looking at this historically. And let's go to the 15-minute chart. Now remember, the doji has technically already happened and broken out, but I want to show you what it looked like, because as the doji closes, you can go to your short-term charts and they will not have broken out, and you can set up your support and resistance lines and get ready for the breakout. So historically, we're seeing this after the fact, but my point is that when these are really happening and a daily doji candle closes, which is daily candles close at 5 p.m. Eastern Standard Time, then you can go in after that and just look after 5 p.m. Eastern Standard Time to see when daily candles closed, if any of the majors or crosses, any currency pair formed basically a plus sign on the daily. If it did, go to its 15-minute chart and look at all the common support and resistance levels you can find, and then look for a breakout. In this case, the breakout was downward. Here was your first chance to sell short. It further broke this longer support here, and just really unleashed. And so, it went from above 9,900 to 9,860. So would have made a good 40-50 pip short-term trade there. So again, that's very powerful move that it made. Let's look at one more. I'll give you another example just so you see this is not an anomaly. Let's go to the daily chart of dollar yen. Again, and this pattern, this does not really matter what the daily overall trend is or anything like that. You're just simply looking to identify a doji candle. Here was a doji candle. Here was the next day was followed by a doji candle. So actually, there will be a breakout up and down. We'll see in the short term of 2 trading opportunities after the original doji, and then there's one here as well. And just to point out past dojis, here was a small one, and you can see a big move up. Here is a better one, and you can see a big breakout up. Here's one, and you can see a big move that followed it. Here is one, and you can see a big move that followed it as well. So just to show you the power of basically the doji, which is a plus sign. And so, okay, so I'm on the 15-minute chart, 10-day chart, looking back. So 10 days in time, each candle is 15 minutes in duration. First thing I notice is this the trend that was here during these dojis. Keep in mind the doji period was right in here. There was also a downward trajectory that was forming here. So we can show that. And then there was some horizontal resistance right in through here at the time as well. And so the first trade, of course, is when the pair breaks the larger trend line. So the first trade is to take it short. It falls to this support. It breaks through this horizontal support and falls further. It starts to go sideways, so you can cover the trade. That went from about 83.50 to 83, so that was about a 50 pip move just within some hours there. And then it pushes back up towards the trend line break and starts to head lower again. Now also on this particular one, even a little bit more of the near term, when we delete these lines, there has been another consolidation and another pattern right here. There's a triangle that has formed also that we see right here, and this will provide another opportunity for a breakout to the upside or the downside. So you're just looking for a breach of the line. So the point is, look to the daily charts for dojis, and you only have to bother looking at those right after 5 p.m. Eastern Standard Time. Once the doji is completed, go to your short-term chart, which is like a 15-minute chart. Look in a good number of days back, about, I would say 10 days back. If you can only look 5, that's fine, but 10 is better. Look at the long-term trends and long-term support and resistances. Draw those on there, and then look for near-term support and resistances as well that happen during the doji period, and trade any breakouts that come, whether to the upside or the downside. Hey, thanks so much for watching, and don't forget to click on the link below so that you can see some of our other trading services. Thanks so much, and bye-bye.